Good evening, YouTubers. This is Trader Lewis. We're gonna go over our trades for the week. It was a fantastic week for everybody. Hopefully, we are gonna go through my Amazon trade that I did this week. This trade was actually a naked call option. I bought it right here on the actually on the 12. I bought it on the 12. Held it basically overnight for for me not to use a day trade since it's a small account. Didn't want to use day trade and missed a pop. Right over here. Where's the pop? Yeah, basically here. On the following day around 10 a.m. the contract was selling for a larger amount for roughly $10. On the following day around 10 a.m. I missed that, so I waited to 10. Yeah, right here, about here for one contract. I missed it on this candle here. Missed to sell off for $10 would have been a $300 profit. At this point, I was basically down because of the time decay. This is what happens when you buy a naked call, and I could put basically fighting time at this time. I should have just sold it, for around here. Basically, just to get out of the trade. I didn't want to. So what I did, I averaged down and bought a second contract for $560, which brought my average to $640 with the previous contract of $719, $7.19. So average down to $6.40 for contracts. And now this time I had two contracts at this time. So when I sold it both contracts at $8.45, $845. So roughly $205 per contract, and I had two, so $410 was my profit for this trade, which is not bad, considering that Amazon kind of downtrend. Basically, I should have sold it back here on this candle here in the morning. I missed it. I missed that candle also for whatever reason. And then I think I ended up selling it right over here about an hour before closing. Which is good, because those contracts at Friday were basically worth $113 at closing and stuff. So it was a great trade. It was not a smart trade, but it came out to be a green trade. So this is kind of the Amazon how Friday trended Friday. You know, it opened, high, and then closed below and dropped all the way down, kind of went back up, and it was kind of the stock was kind of not showing definite way or direction of which way it was going to be trending. My second trade on this, it was a basically a credit spread so I sold my credit spread. Let's see if I want to bought it. So I sold it there. And when did I buy it back? Right here. So I bought it for 19.9 on this trade. Then I sold it for 16.01. Looks like 16.01 there. So this was kind of a this was a vertical credit spread. If I could find the shots for this trade, I'll show you. 17, 65, 62. $82 and $87. So this is basically how it looks. Basically, it's a credit spread. This is the 17.82.5 put. Basically, this is the P&L for this is 318.50. And then we got $17.77. So 318.50 and 294. That's roughly a 60 $24 profit between this basically this put credit spread. I'm gonna make $24.50 on this trade. It's another green day. As long as we stay green, take your profits early. And this is the other one. This is basically the one I just went with. That is proof, $440 for 2 contracts. And then I had another one. I have this one here. To take this number for a put credit spread, so I didn't get the max credit for this. Obviously Amazon did not end above 1765 on Friday. I basically got out of the trade, keeping me from having a losing trade on Friday. So this is what I collected for each, basically each strike price. I forgot how much I sold it for last week, but I collected. Basically was a profit of $62.50 for this trade here. But two trades combined, roughly $100 on a small account. So sometimes you just have to take profits on on your trades. Keep you from having so many losses and mitigate losses, and that's basically kind of the trades that I have for the week. I also had. I wish I could show you, but for some reason I cannot find this trade here on the charting. The strike price is no longer there. TD Ameritrade basically took it off, and it just won't let you look at the charting. So this is another green trade also on SPX. I bought the calls $31.90, $130 profit there. But if we look at SPX, I sold it a little early. I sold it over here right at the end, I believe. And hold on. So I bought it. It was a day trade for that one. I didn't held it overnight. I think I bought it somewhere down here at the bottom, and I think I ended up setting it up here right for closing on Thursday, and then here comes Friday. He gets up to 31.82. But that's just how the stock market is. You don't know what's going on, especially with this trade war going on with Trump and China. You just want to be, green for the day. Not having enough green, enough trades that are positive, keeps your account growing slowly. So that was that kind of that trade there. Now for this week, I still have a Amazon trade for this week. I bought the December expression this Friday. I bought the 1777.50, and then I sold the 1782.50 for Amazon. So this is how basically Amazon is trending for the last 3 days. I think we might continue to bounce back. If we could break the 1760 area, 1765 area, I think we might continue. We might see 1800s by the end of the year. I know a lot of people saying that they just lost a Jedi bill. Amazon has grown before the Jedi bill. I think Amazon still has a long opportunity to continue to grow in the future. So Amazon will continue to be a perfect, a good growing stock. If you would like to buy the stock and own it, Amazon continues to be one of those stocks that you will continue to earn money in the future. So this is kind of my play for Amazon. Now again, if the trade starts trading on the wrong way, of course I would sell it or roll it over basically. And we'll see how this trade goes. To make it easier for everybody to see, I'm gonna take some of this charting out, make it a little bit more cleaner for you guys. So it's this is the 20 EMA line, just kind of riding on the 20 EMA line. Now we break above the 20, like I said, we might continue to bounce back. We might even try to hit this to 200 EMA. If we do, it's a great opportunity for everybody to jump in on selling put credit spreads. Naked calls, naked puts, you want to be careful with those. Don't trying to keep them more than a couple of days, and take your profits. Let's be safe and let's stay green for that. But that's kind of Amazon. I do have another one at ULTA. I've been looking at this stock for a few days now. So this is kind of ULTA, it was up here close to the 400 mark, 300 and some change, 80 some. They had bad earnings. That's why they just fell all the way down. I think if we break above here, ULTA can continue to be up here on this 380 mark. The 280 mark, 270. We break above here. I have a call for January January 10th. I have a call about basically the naked call for the 280 call. I'm hoping in the next weeks, jump back up to 270 on there, and I think I only pay $2 for that call. So 200 to potentially make a little money on that trade. So I'm keeping an eye on ULTA. Now for my weekly trades of this week, if we go So we have Amazon, Bank of America. This is Comcast. This one here. CRWD. It's just a stock that popped out on my scanner. GSK, HAL, Kinder Morgan, and of course we have ULTA down here at the bottom. So we have 8 stocks that we are currently watching. I already went and placed some of these orders on some of these. Basically, they are either call credit spreads or put credit spreads on each one. On CMCSA, we are selling 20 basically credit spreads on the put side, the 44 and the 45s. I'll put a limit by selling order of $1. If it doesn't get filled, it does not get filled. I guess $1 on that. We are selling vertical also 10 contracts on CRWD, the 50 and a half and the 49 and a halves. GSK, we are basically selling another call spread on GSK, the 44s and the 45s. The HALA, we are basically selling calls, 20 contracts for the 23 and the 23 and a halves. Kinder Morgan, KMI, we're selling 10 contracts at the strike price of the $19.5 and the $20 strike price on the call side. We're selling those. And then of course ULTA, where we have the naked call there that expires in January. So we are gonna go on why we put those trades and the reason why we went and did that. Give me a minute here. Alright, so let's start with Bank of America. We're gonna go to our studies. I need the other. Alright, so this is basically my study that I kind of normally use as schematic fast. I use 3 of those, 3 different timelines, and the MACD. So for Bank of America, we are above the 200, and we have basically a red candle. Basically, it's being rejected. Price being rejected here. So when basically put a sell order out, if it jumps up to 25 and then comes back down, all I need is a kind of 20-cent move, 30-cent move on the downside, and then I'll gladly close those contracts. I don't need to get the full premium on those. So this is Bank of America. This house is looking on the daily. Higher lows, lower highs, higher lows. But if you notice on the pattern, the schematics, I found it that I just started using this, and I find it that very useful so far. I've only been using it about a week, and that's how I was able to, be green on Amazon, and SPX is news. Amazon was a good trade for this week. So the schematics on the down here at the bottom, I'm using the 9.3, the 14.3, the 63, and then I have my MACD set at 9, 14.269 exponential. So as you see, once it crosses here this bottom line on close to all three, it's giving me a buying signal here. So that's your buy signal there. I mean, you could buy here, or you could wait for this next candle the next day to close, and then you buy either on this candle here or wait over here. And as you see, it started going up, and then you got your sell signal. It's just kind of a fake signal, because look at the next candle. It's trying to back up. So sometimes your studies might not be accurate. That's why you use another one, the MACD. Let's see, this one showed a down pattern, which the MACD is showing a little, but it stayed above. And then once it crossed, the MACD crossed below, it basically traded sideways. Now it's crossing back up, so I think we might see a pop to the upside, and then we'll retrace back down. That's I put a not a market order, put a limit to buy or to sell. I think it's at $1, I believe. So that's Bank of America here. Then we have CMCSA. So this is another one. All three schematics are at the bottom, showing like an uptrend momentum. It's gonna go, up, forward, top. It's gonna keep uptrending. The MACD is showing signs of movement up. It could still get rejected and fall back down. I also placed an order for this for a little bit higher than what the market order is, or the asking price, to see if I get a fill, because I'm selling on the put side. So when you sell on the put side, you want it, you basically you want it to dip more and then reverse, to that way you get a little bit more credit on your contracts. So that's how that one is showing. Now we go to CRWD. Same as the other one. Has a buying signal here. I believe it could get up to this area here in the next few days or in a couple weeks. Every time it reached the same bottom, it uptrend here to this here. Last time it got here, basically went up, a couple of dollars up here. So I'm also selling the put side again, I'm expecting a move on the upside. I'm keeping an eye on this. I have I have back tested my scanner, but this is what it came up on the scanner, on this trade. That's why all of them I'm showing you a schematic sitting at the bottom, and the MACD is showing kind of a reversal on these. So then we got GSK. This one, it's has a sell signal on this one. This one is a little bit different. A sell signal here, a sell signal here. The schematics are basically shown overbought. The RSI, the MACD. If we look at it, and kind of a curve also there, but it dropped after it hit this level here. It couldn't get up above this level here. So I believe that it might come down here to where the 200 level is, which is at the $45 mark. It couldn't get above the 46 and a half, 46.40. Cannot get up above those levels, so I think it might reverse back towards the downside. GAL. Alright, so this is another one that came out on the scanner also. This is basically the daily, how the daily looks. Right here in this area here. Kind of it got rejected. So it's like a couple times in the $25 mark. If it gets up to the $25, it might bounce back up, or it might bounce back down. I'm looking more of a downside. The schematics, all three of these are showing on a down pattern, but I could be wrong. But because look at the MACD, are making lower highs, lower, and then highs, and my curve here a little. So also on this trade here, I'm also looking to not make a lot of profit. I'm trying to sell 20 contracts on these. So even a 10-cent move on these contracts for 20 contracts, that's a substantial amount of capital gain there. Now I could also lose, if it continues to make another lower high and on this particular stock. So that's kind of what I'm looking at so far. Kenny Morgan, KMI. So Kenny Morgan also it's showing here higher lows. It's basically kind of leveling itself out here on this area. The schematics on the 60 still continue showing uptrend. I think it might continue to go up. I got two sell signals here. Kind of same way over here, two sell signals. I haven't traded this stock at all. Just the signals generated by this studies. I got two sell signals here. It got rejected here in the same area that the sell signals are, with a two topping tails at the $20.45. So I think it might reverse back to the downside. That's kind of my guessing there. Technical analysis, you can only see it. It just kind of, you can't really say, oh well, yeah, it's gonna downtrend tomorrow, because this is what's showing. It's gonna happen. Anything can happen. If we knew how a particular stock would trade on a particular day, everybody would be rich at this time. So then, ULTA, we already talked about ULTA. This is how I think I'm gonna trade this. I think it's on the. I think it might sell a little more. It's in the overbought area. But my contract, like I said, it doesn't expire till January of next year, so in about a month. And from the MACD, it's showing an uptrend momentum. So kind of, I'm guessing, it might continue to uptrend by the end of the year. We still have this whole gap to fill here from earnings, so we could start filling some of that gap. It might be good for me, since I'm bullish on this stock. Of course, it kept up here. Not sure why. Thanks for about news. It's above the 20 EMA. So that's so far what we got so far this week. 8 stocks that I'm currently watching. Like I said, I already placed some of these orders out. Not basically not market orders. I put a limit above the market order. So I'm hoping to get fill on some of these, not all, but some of these. But I will update next week again. Today is December 4th, 2019, and we are growing a small account here on this particular trades. Remember to like, subscribe to the channel, post your comments, questions down at the comments below. Hit the like button so I continue doing more videos like these. If you guys want to know charting patterns or what to look for, I could do a separate video on that later. But like I said, I am going to continue to grow. This is a small account. But again, this is Trader Lewis. That says sign up, subscribe, hit the bell notification for you guys to get notified to when I am post videos online. Again, you guys have any questions? Comments below. Hit the like button. Don't forget. Y'all have a good weekend. Trader Lewis signing off.